What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm a long-term dividend investor sharing my journey to $100,000 dividend investment portfolio and taking y'all along for the journey. And in this week's video, we're actually doing a full entire recap of my first year dividend investing. We're going to go over my gains, we're going to go over my riskier investments, and we are also going to go over the entire dividend payments that I have gotten for this year. I have a very exciting video for y'all today, but before we get into that, don't forget to subscribe to the channel if you have not already. We are growing tremendously fast on TikTok as well as here on YouTube. And also comment if you liked the video or if you have any questions, and don't forget to like because that does help out my channel tremendously. Alright, let's roll the intro. Okay, so if you are a regular here on my YouTube channel, you know that I go over all of my buys and the value of my portfolio in every single YouTube video every single week. I'm just going to switch it up a little bit. I'm going to go over my buys first before I go over the value of my portfolio, because we are just going to go straight into the gains after I talk about the buys that I did this week. So let's go over those buys really quickly. So the very first purchase that I did this week was buying one share of Verizon. As we can see, I bought one share at an average cost of $54.99. And then going into Verizon, I now have 14 shares of Verizon at $54.08. A total market value of $768.04, or about 6% of my portfolio. And as we can see, I'm negative overall $31.13, or about 3%. With the telecommunications sector in my portfolio, it is performing really bad right now. Both Verizon and AT&T are negative, but I'm not too worried because in the long run, I'm getting dividends off this company. And what I have been paid in dividends is more than what I'm negative right now. But I'm not buying any more shares of AT&T just yet. But with Verizon, I still believe in them. They are very volatile, and that's okay because I did know that going into it. So I'm just going to continue to buy the dip, bring my dollar cost average down with Verizon. So that way when they go back up, hopefully around the holiday season, I will be positive and then get more dividends at a cheaper price. Now the second buy that I did this week was buying $70.01 worth of Target. As we can see, that $70.01 gave me 0.28 shares, and that was at an average cost of $243.98. And then going into Target, I now have 2.26 shares at an average cost of $224.77. giving me a total market value of $549.44, and they make up about 4.5% of my entire portfolio. And then as we can see, I'm up overall $41.39, or about 8% on Target. So with Target, I do want to buy a lot of shares of this company because I really believe in it. I do want to have about $1,000 of each in the near future of my portfolio. Now that the buys are out of the way, let's go over the value of my portfolio. So as we can see, hopping into Robinhood, my portfolio is currently sitting at $11,973.17. I am down on the day $76.68, or about 0.6%. On the week, I am down $46.63, or 0.39%. On the month, I am up $45.57, or about 0.38%. On the 3 months, I am up $158.76, or 1.34%. And then on the year, I am up $1,567.43, or about 15.06%. So hopping into my overall gains for this portfolio in 1 year's time, as you can see, my total return as of right now is $1,573.70, or about 15.13%. This is amazing growth that I have had over the past year. 15% is quite amazing. Honestly, when I started this journey, I didn't think I was going to get any more than about 7% return. If we take into account that the S&P 500 on average returns about 7%, I beat the S&P 500 just by investing by myself. Now, I would like to think that it's not luck at all, and I had some pretty educated and informed decisions that I made for this portfolio. But to be honest, at the beginning, it was kind of a lot of luck. I did really good by investing into ETFs at first, dipping my toes into the stock market and slowly but surely investing into individual stocks, which ultimately gave me much more of a greater return while also getting paid dividends. But I would say about 1% of that is dividends being reinvested back into my portfolio. So in total for this portfolio, I've probably put in about $10,400. To get $15,000 in return is amazing. And now we're going to calculate how much of that is dividends. Normally all I would have to do is subtract the amount that I've put in by the growth and the amount that I am up, but luckily all I have to do is hop into my spreadsheet, which I kept track of all the dividends that I got paid over the past year. So as we can see, hopping into my spreadsheet, I've had some pretty solid consistent growth in this portfolio over the past year. I went from last September getting about $51 in dividends to just last month in August getting $49.61. That is amazing growth. And as we can see, last year I made $21.12, and so far this year I've made $205.72 off this dividend portfolio. Doing the math really quickly, that is a total of $226.84 of passive income. It always amazes me how much money I have made so far by doing absolutely nothing. This is the entire point of doing this dividend portfolio. I wanted a steady source of passive income. And as we can see, it's been working out pretty well for me. Now to go even more in depth, we're going to hop on over to trackmydividends.com. If you don't know, trackmydividends.com is how I keep track of my entire portfolio. This tells you things like dividend yield, yield on cost, the gains of your portfolio. You can also go in depth and look at things like what's your biggest winners, what's your biggest losers. There's so much to look at, but I did make an entire separate video on that, so I won't go on any longer. But hopping into trackmydividends.com, I did update it with this week's buys. As you can see, my portfolio is sitting at that $11,956. It updates every couple hours or so it's not always going to be spot on. But as we can see, my current dividend yield is at 3.46%. As a dividend investor, I want to shoot for a 3 to 4% dividend yield. That is what's considered quote unquote safer, and that's what I feel comfortable with investing. And then hopping into the yield on cost is at 3.85%. And in an ideal world, that's going to be a little bit lower. As time goes on, that's going to go down more and more. I'm not too worried about it right now because it is only my first year investing. Most of the time, it doesn't even really matter. That's just a number for you to look at. And then as we can see, my estimated annual income is at $413. That's passive income. That's what I'm going to be getting for doing absolutely nothing. I emphasize that a lot because it's completely true, and as you can see by this big smile, I love doing it. But the reason that it says $413 on here and I haven't really gotten that $413 in full is because when you do get paid a dividend, there is a period where you have to wait. So let's say Apple confirmed their next dividend payment right now. Any more shares of Apple that I have after that date is not going to count towards that dividend. So that's the only downside about trackmydividends.com, is that they don't take that into account. They estimate your earnings as if you were to get full payment for all of the shares that you do have, even though sometimes you buy after the dividend date and you're not going to get the full amount of dividends for that specific stock if you have not bought in before that dividend date. But now that we've gone over my gains, all the dividends that I have gotten paid, and the value of my portfolio using trackmydividends.com, and the value of my portfolio, I lastly want to touch on the risk that I have done in this portfolio, because ultimately I do think that it's a lesson that I have learned and I'm not going to make these mistakes again. So as far as risk in this portfolio, like I talked about earlier, dividend investors want to have about that 4% dividend yield, and there are some stocks in my portfolio that I have just to counteract that balance of having low dividend yielding stocks. I'm talking about Apple, I'm talking about Costco, Target, and Microsoft as well. All four of those low dividend yielding stocks make up about 20% of my portfolio. To balance that out, I do have some higher paying dividend stocks. That's not always a bad thing, but I did make a huge mistake earlier in my investing career, and let me show you that. So I FOMO'd into NEO. Now NEO had a lot of potential at the time, and I just started TikTok at this time, and NEO was the absolute hype. But I do think I just bought in at the wrong time. I bought in too high, and ultimately I bought 5.20 shares at an average cost of $55.63, a $212 value, making up about 2% of my portfolio, and then overall I am down $76 or about 26%. Now this was a good lesson to learn because I thought I was going to get rich quick. I kind of went against everything that I stand for as a dividend investor here. It's a great lesson to learn, and it's completely okay because I am just going to sell off NEO at the end of the year to tax harvest, and ultimately I went against my golden rule and not understanding that time in the market is always going to beat trying to time the market. Don't FOMO. The longer you stay in as a dividend investor, the more dividends that we're going to get. Now we've gone over my gains, we've gone over my dividend payments for the year, and we also talked about all the risks that I did in my portfolio. So it leads me to this. Where is the future of my portfolio going? Now I do see my portfolio taking a little bit of a hit when it comes to dividend yield. This is because I'm going to heavily invest into Microsoft, Apple, Target, and Costco. These are companies that I want to be at the core of my portfolio and then let everything else just kind of trickle down. So I'm willing to let my dividend yield drop below about 3% just for a little bit and ultimately be investing into these solid dividend stocks, or should I say these quality stocks that just so happen to pay dividends. I believe in them that much. I've gotten amazing returns, and they are the highest returns that I've gotten in my portfolio for a reason. And as far as all the losses that I have in my portfolio, I think the only one that I'm really going to sell off is NEO. I think that's just a lost cause, and the rest of them, like the telecommunications sector in my portfolio that's negative, I am just going to keep dollar cost averaging into them until they eventually go positive, because like I said, time in the market is always going to beat trying to time the market. In 25 plus years, when this portfolio is nothing but positive and getting paid a crazy amount of dividends, I'm not going to really remember all the little ups and downs of the stock market. Man, thank y'all so much for all the support that I have gotten on this channel so far. Y'all are so amazing. I appreciate you so much. And I'm just going to keep bringing this amazing stock content for y'all. But that is all that I have this week. It was pretty fun going over my year recap. So that is all for this week. Thank y'all so much for the support. Subscribe to the channel if you have not already. Comment what your goals are for the rest of the year. What dividend yield you want your portfolio to be at. If you have any questions, so comment what your goals are so we can keep each other accountable. But also don't forget to like the video because it helps out my channel so much. And I will catch y'all next week. Peace.